Hello friends, just in our lecture we just focused on various concept of company's final accounts. Each and every Indian company have to prepare final account as per the Companies Act 2013 section 128. Now, when we discuss about the final account, first of all, we know about the financial statement. So, first of all, what is financial statement? In financial statement, we consider balance sheet as well as we consider P&L statement as well as we consider cash flow as per the accounting standard 3. But my dear friend, we focus that, we know that, we have to know that each and every company have to prepare a cash flow, but may not include one-person company, OPC, small company and dormant company. We just recapitulate ourselves. In financial statement, we consider number 1 balance sheet, number 2 P&L statement, number 3 cash flow, as well as we consider a statement of change in equity if it's applicable, and an explanatory notes annexed to or forming part of any related transactions. So friend, again in financial statement we consider balance sheet, P&L statement as well as cash flow, finance, as well as we consider a statement of changes in equity and any explanatory note annexed to or forming part of a related transactions. Now friends, we just discussed about a definition of financial statement. Now we focused on a format of balance sheet or annexure of Schedule 3 of a Companies Act 2013. Now, when first of all we focused on balance sheet, as per the section 128, they give us a specific format. And when we discuss about the format of balance sheet, in simply there are two portions that we know. First portion, it is for equity and liability, and second portion, it is of the assets. When we focused on equity and liabilities, simply in equity and liabilities, first of all, the first point is shareholders fund. In shareholders fund, in first point we consider share capital. In share capital, we consider simply equity share, preference share, calls in areas, calls in advance and share forfeiture. In second point, B point, we consider a head of reserves and surplus. In reserves and surplus, we consider all type of reserves like a general reserve, specific reserve, as well as special reserve, capital reserve, and we consider any reserve which are related with appreciation of assets. As well as we consider security premium and opening balance and closing balance of P&L statement. In C, we consider money received again share warrant. Now, just we recapitulate ourselves in equity and liability. In shareholder funds, we focused on share capital. Second one, reserves and surplus. Third one, money received again share warrant. Then share application, money pending allotment. So in first portion, we focused on shareholders fund. In second portion, it is non-current liabilities. My dear friend, in equity and liabilities, there are three portions. Number 1, it is share capital or shareholders fund. Number 2, non-current assets. And number 3, current assets. In non-current assets, there are 4 segments. First segment A, long-term borrowings. Now in long-term borrowings, we consider all type of loans which taken by a company or which consider a long term. Now what is long term? Simply the time span of any loan is more than 12 months. liabilities. It's known as a long term. In long term borrowings, we consider bank loan, public deposit, debentures, etc. In second one B, we consider deferred tax liability. In C, we consider other long-term liabilities. And last one in D, long-term provision. So my dear friend, in non-current liability, there are 4 segments: long-term borrowings, deferred tax liabilities, other long-term liabilities, and long-term provisions. In third segment, we focused on current liabilities. Now, in upper portion, in non-current liabilities, we written down long-term or other long-term or long-term provisions. In current liabilities, for our conveniency, we just consider one specific word. It is short-term. So, in current liabilities, number 1A, short-term borrowings. The time span of that borrowings are less than 12 months, as well as trade payables, then other current liabilities and short-term provisions. So again, my dear friend, in one specific portion, it is a equity and liability. There are 3 segments. Number 1, shareholders fund. Number 2, non-current liability. Number 3, current liability. We discussed about the portion of equity and liability. Now we focused on assets. In assets, first of all, we written down all type of non-current assets. Now we discuss about the non-current assets. In the aid of non-current assets, first of all, it is fixed assets. In fixed assets, first of all, we consider a tangible assets. But obviously, we all know about the tangible assets. Intangible assets, we consider land, building, furniture, fixtures, machinery, etc. In second one, we consider intangible assets. In intangible assets, we consider all type of intellectual properties like a goodwill, patent, trademark, copyright, etc. In third one, we consider a capital WIP. In fourth one, intangible assets under the development. Now what is the under the development? It is a intangible assets, but it is under the process. For that intangible assets, we just apply, but we don't get a license from the government. It's known as an intangible asset under the development. Now second one, B portion, non-current investment. Again, what is non-current investment? Simply, the time span of any investment is more than 12 months. It's known as a non-current investment. Next one, deferred tax net as per accounting standard 22. In D, long-term loan and advances and other non-current assets. My dear friend, again just we recapitulate ourselves. In non-current assets, first of all, fixed assets. In fixed assets, tangible, intangible, capital WIP, intangible assets under the development, then non-current investment, deferred tax assets, long-term loans, other non-current assets. Now in second portion, we focused on current assets. We follow the sequence. We have to follow the sequence as per the norms of Companies Act 2013, as per the provision of 2013. So, in current asset, first of all, current investment, then inventory, then trade receivable. In trade receivable, we consider a debtors as well as bills receivable. Next one, cash and cash equivalent, then short-term loan and advances, then other current assets. Now, next one, we focused on a format of P&L statement. Now, when we discuss about the P&L statement, but obvious, there are 2 portions, income and expense. In income, first of all, we consider a revenue from operation. It is not other than sales. It is the other name of sales. So, revenue from operations, it is our sales, as well as a credit side of P&L account. So, all type of income, it's known as other income. So, the total of revenue from operations and other income is equals to total revenue. Now, for our conveniency, expenses are differentiate in 5 heads. First of all, the expenses which are related to manufacturing. It's known as a manufacturing expenses. In manufacturing expenses, first of all, we consider cost of material consumed. Then we consider purchases. It's known as a purchase of stock in trade. Then we consider difference between opening stock and closing stock is known as a change in inventory. Now, in next one we consider other manufacturing expenses. What is other manufacturing expenses? What is WIP, the progress of stock in trade? Now, WIP, progress of stock in trade, as well as other manufacturing expenses. What is other manufacturing expenses? But obvious, the expenses which are related to manufacturing, which is we already written at the debit side of trading account in 11th and 12th. It's known as other manufacturing expenses. So first head is manufacturing expenses. Second one, it is administrative and selling expenses. All expenses which are debited to P&L account, it's known as administrative and selling expenses. In that we consider employee benefit expense like a salary, as well as any related canteen expense, etc., other administrative and selling expenses and other expenses. Now we find out the difference between, as well as now we consider first of all manufacturing expenses, then administrative expenses, then finance cost. What is finance cost? In finance cost we consider all type of interest which company have to pay. It's considered under the head of finance cost, and then we consider a depreciation, and last one we consider other expense. In other expense we consider specifically preliminary expense. As per the accounting standard 26, each and every company have to return off 100% preliminary expenses from the P&L account. Now we find out the difference between income and expense, and we find out the difference, and if it is positive, it is profit. We deduct tax, then we find out profit after tax, and that profit after tax transfer at our note number 2, reserves and surplus. Now dear friends, now we focused on the following items are given in the trial balance of the XYZ Limited as on 31st/3/2016. Identify the proper head in viewpoints of a Schedule 3 to the Companies Act 2013. Now we find out a head and written down the specific expenses or income or asset or a liability. So first one, it is goods in transit. It is our slide number 44. We start with slide number 44. Now first one, goods in transit. Question number 1, goods in transit. It is our stock. It is our assets. So but obvious we written down in a head of inventories. Second one, closing stock of finished goods. Again it is a closing stock and stock, but obvious we written down under the head of inventory. Third one, closing stock of raw material. Again it is a closing stock. It is written down in the head of inventory. Audit fees. First of all, it is our expense. So written down in P&L statement. In P&L statement, there are various type of expense. Again, I recapitulate: manufacturing expense, administrative and selling expense, finance cost, depreciation and other. Audit fee, it is written down under the head of other administrative and selling expense. Now bank balance, but obvious it is our assets, it is our current assets, so we written down under the head of cash and cash equivalent. Custom deposit for more than 12 months, more than 12, so we written down one specific word, it is long term, so we written down in the head of long term loan and advances. P&L credit balance, it is our profit, and P&L credit balance, it is our closing balance of P&L account, and we have to written down in our note number 2, reserves and surplus. Now salary, but obvious it is our expense. It is written down under the head of administrative and selling expense, and we written down employee benefit expense. TDS from a salary. Credit balance, it is our liability. So we written down under the head of other current liabilities. Interest on debenture, gross interest. Again, we just recapitulate ourselves. Any interest company have to pay, it written down in our head of finance cost, and finance cost is written down under the head of but obvious expenses P&L statement. Now TDS from interest on debenture, it is written down under the head of other current liability. Interest income gross, credit balance, it is written down under the head of other current income. Now TDS on interest income, debit balance, it is our asset. So short term loan and advances. Torrent power deposit from more than 12 months, debit balance, so written down at asset side more than 12 months, so it is a long term loan and advances. Bills receivable, but obvious, it is our asset and written down under the head of trade receivables. Next one, license, debit balance, it is our intangible assets. It is a license related to our intellectual property. Director's fees, but obvious, it is an expense written down under the head of employee benefit expense. Staff welfare expenses, it is written down, it is our expense and written down under the head of employee benefit expense. Marketing expense, but obvious, other administrative and selling expense. Furniture, premises, they are our asset and it is our fixed assets, so written down under the fixed asset, and it is our tangible assets. RBI bonds debit balance, it is more than 12 months, so it is our non-current investment. Debt reserve deducted from but obvious trade receivable, and trade receivable written under the head of current assets. Administration expenses, but obvious, written under down the head of other administrative and selling expense. Debtors, it is our asset written down under the current asset and the head of trade receivable. Advertisement expenses, debit balance, but obvious, it is written down under the head of other administrative and selling expense. Prepared income tax for current year, but obvious, it is short term loan and advances. Debenture redemption reserve, credit balance, it is written down under the head of reserves and surplus. Now long term investment, long term more than 12 months, it is written down under the head of non-current investment. Bills receivable, but obvious, under the head of trade payable. Call scenarios, written down in share capital. Share forfeiture, add in share capital. Calls in advance, but obvious, other current liabilities. Preference share capital under the head of share capital. Unclaimed dividend, it is our liabilities, so written down under the other current liabilities. Unpaid dividend credit, but obvious, other current liability. General reserve, it is a reserve written down under the head of reserves and surplus. Sales, written down in a P&L statement. Income side, revenue from operations. Debenture, it is written down under the head of long term borrowings. Term loan from bank, but obvious, written down under the long term borrowings. Creditors, it is written down under the head of trade payables. Preliminary expenses, but obvious, under the written down in other expenses. Each and every company have to written down 100% preliminary expenses. Capital reserve, it is a reserve written down under the reserves and surplus. Security premium, again it is a reserve written down under the reserves and surplus. Legal expenses, but obvious, related to administrative and selling. Provision for taxation, credit balance, it is a short term provision. Share in Tata Global, debit balance more than 1 year, but obvious, it is our asset, so it is written down in the head of non-current investment. Rent, rates and taxes, It is expense written down under the other administrative and selling expenses. IDBI loan more than 12 months, but obvious written down under the head of long-term borrowings. Provident fund, it is a short-term provision. Loan from state financial corporation, again credit balance, long-term borrowings. Loan from state financial corporation repay within a year. So we written down under the head of other current liability. Gratuity paid, it is an employee benefit expense. Prepaid insurance, short-term loan and advances. Loan to directors, debit balance written down under the head of short-term loan and advances. Contribution to provident fund, it is our expense, so written down under the head of employee benefit expenses. Public deposit, it is our liability and it is our long-term liability, so written down under the head of long-term borrowings. Capital advances, but always written down long-term loan and advances because of it is a debit balance. Security deposit, debit balance, our asset, and written down under the head of long-term loan and advances. In first portion we just discuss about the meaning of financial statement. In second one we discuss about the format of balance sheet. In third one we discuss about the format of P&L statement, and we just complete a list of a bunch of expense as well as the liability or asset which written down under the specific head. Now we take one practical example of a financial statement. Now prepare the balance sheet as at 31st March 2015 from the particular furnished by Weasel Limited as per the Schedule 3 of the Companies Act 2013. Now first of all we focused on various varieties. They give us equity share capital, call scenarios, land, building, plant, furniture, general reserve, loan unsecured, provision for taxation, sundry debtors, advances, dividend payable, profit and loss account, cash balance, cash at bank, preliminary expenses, sundry creditors for goods expenses, stock finished goods and raw material, and they give us an adjustment. Now first of all we focused on adjustment. In first adjustment, 1500 equity shares were issued for consideration other than cash. So amongst the 8 lakh equity shares, 1500 equity shares issued other consideration other than cash. So first of all we prepare our note number 1. It is related to share capital. In share capital, in inner portion we written down simply, in our note number 1 we written down a share capital 80,000 equity shares, out of which 1500 equity shares issued for consideration other than cash. It is an informative portion and amount is 8 lakh. Now our second adjustment, and it is a loan of rupees 1,20,000 for IDBI is inclusive of 6,000 for interest accrued but not due. The loan is hypothecated by plant and machinery. My dear friend, the loan is hypothecated by plant and machinery, so it is a secure loan. And first of all, in 1,20,000 there are two portions, 1,14,000 and 6,000. 1,14,000 it is our loan written down under the head of long-term borrowings, and 6,000 it is accrued interest. So friends, we prepare note number 3, long-term borrowings, and in note number 3 we written down our loan. It is secured loan from IDBI, 1,14,000, and 6,000 we written down ahead of other current liabilities. It is a outstanding interest of loan 6,000. So my dear friend, there are two entries. First one, it is written down in our note number 3, long-term borrowings 1,14,000, and second one 6,000 under the head of other current liabilities. liabilities. Now we focused on our next adjustment, and our next adjustment is debtors of rupees 50,000 are due for more than 6 months. Now debtors of 50,000 are due from more than 6 months. So but obvious for that we prepare a note, and a note is, but obvious it is related to trade receivables. So in trade receivable we written down a debtors for more than 6 months. It is 50,000, and remaining debtors 1,10,000. It is written down other debtors, or we written down it is a less than 6 months. So we focused on our next adjustment, and our next adjustment is the cost of assets building 3,20,000. The cost of building is 3,20,000, but the book value of building, and now we focused on the book value of building. The book value of building is 2,80,000. Please pay attention, my dear friend. The cost price is 320. Nowadays it is 280. So it is decreased by 40,000 rupees, and it is a depreciation. So we written down in one specific note, and it is written down a note of tangible assets, and we written down a building 3,20,000 minus depreciation 40,000, and in outer column we written down 2,80,000. Second, when they give us a cost price of plant and machinery in our sum, it is 5,60,000, but the current price, book price is 420, so the amount of depreciation is 1,40,000. Now the next one is furniture. Again the cost price is 50,000 and the current price is 40,000. So but obvious the 10,000 it is our depreciation. Now we focused on another adjustment, and another adjustment is bank balance includes 2,000 with Trust Bank Limited, which is not a scheduled bank. Now they give us a bank balance in trial balance, and it is 1,97,600. In 1,97,600, 2,000 related to a non-scheduled bank. So we prepare a note of a cash and cash equivalent, and in cash and cash equivalent we written down a cash bank balance in non-scheduled bank, it is 2,000, and other amount 1,95,600, it is related to other bank balance. Now we focused on other adjustment, and our other adjustment is bills receivable for 2,20,000 maturing on 30th June 2015 have been discounted. 30th June 2015, our year completed on 31st March 2015, so it is an irrelevant information. We written down under the head of separately we written down, and it is our contingent liability. The company had contract for the erection of machinery at 1,50,000, which is still incompleted, not started. It is irrelevant item, so we written down a specific note for that, and written down in the contingent liabilities. So friend, now we focused on a trial balance. Please pay attention here. Equity share, we prepare note number 1, share capital, and written down equity share there, capital there. Second one, call scenarios, written down in our note number 1, equity share capital. Now, is there any provision or any adjustment or any reserves? So for that reserve we prepare our note number 2, reserves and surplus. Here we written down P&L account, which is given in a trial balance, minus we deduct the preliminary expenses 10,640, as well as we written down general reserve 1,68,000, which is given in our trial balance. Next one, long term borrowings. In long term borrowings We written down secured loan from IDBI as well as we written down unsecured loan. Now our note number 4, other current liability, in here we written down, we already written down outstanding interest as well as we written down dividend payable 48,000. Now tangible assets, intangible assets we written down land 160, we already consider building as well as machinery and furniture. Then inventories, in inventory we consider the closing stock of finished goods and raw material. Now trade receivables, we already consider the debtors of 50,000 and remaining debtors 110, total is 1,60,000. In particular, in next one we consider note number 8, cash and cash equivalent. Here we consider cash balance as well as a bank balance. In bank balance we consider non-scheduled bank and scheduled bank. So finally, last one we are written down a footnotes. We close all notes of accounts and we prepare our balance sheet. In balance sheet, first of all, we written down shareholder fund. In shareholder fund, share capital. Note number 1, 7,99,200. As per our note number 2, reserves and surplus, it is 2,37,360. As per our note number 3, we written down long-term borrowings under the head of non-current liabilities. It is 2,10,800. Then current asset liabilities. Here we written down trade payables 1,60,000. Other current liability as per our note number 4, 54,000, and short-term provision 54,400. Our total is 15,760. Now in asset, in non-current assets, fixed assets, intangible assets, our note number 5, 9 lakh. Current assets, inventories, note number 6, 2 lakh. Trade receivable, note number 7, 1,60,000. Cash and cash equivalent, note number 8, 2,21,600. Short-term loan and advances, 34,160. And finally, the total is 15,760. So my dear friend, in my lecture, we focused on, we recapitulate ourselves. We focused on a meaning of financial statement, format of balance sheet, format of P&L statement, and finally we discuss a sum and particular item which written down under the specific head. Thank you very much. Wish you all the very best.